Hey guys, welcome back to Crypto's News. It's me, Omar Bam, aka Crypto, here with your updates, your daily updates on what is happening today. Thank you guys so much for tuning back in and for engaging in the comment section. I have to, have like that thicker skin now, because in the past, I know like some comments have definitely gotten to me. And I have to realize there's going to be good comments and bad comments. People who are saying truthful things, people are saying lies, and just the dang bots and AI, I guess, out there who exist. But thank you guys for staying wholesome out there. And I'm really talking about, like, for example, people be like, what happened to your YouTube channel? And somebody else will respond, oh, it's gone because of all the shilling and scams and rug pulls that he was pushing. I'm like, I'm not even going to respond to that kind of stuff. Back in the day, I was like, I'm going to respond to every single comment, good or bad, but some of them just don't warrant that kind of attention. So thank you guys for kind of being my voice out there and sharing that for me. But anyway, we have plenty to get into today. As you have probably seen, the prices took a bit of a dive, and we'll be looking at that as well as other stuff. So yeah, sit back, relax, and let's dive right into the prices. Hey, what's up, Crypto Mahu? What's up? What's up? So here we have the market caps. We right now are down 7.1% trillion. Pretty nasty here for crypto. Yeah, more of a correction. I would definitely not call this a crash. I think anything that is below 23% crash is more of a correction in crypto. We'd really see more than 30% several times, even during a bull market, and those even would be called corrections versus crashes. So just, I guess, be mindful of your words out there. Just a relatively normal correction when it comes to Bitcoin. It is back below $100,000. We were not able to hold that level, but it's not dipped significantly below that. We are down 4.7% to $97,046.62. And we're still up on the week, 3.8% there with Bitcoin. Ethereum, we suffered a little bit more, down 7.4%. So dang, those nice ratio gains that we had made versus Bitcoin have now been wiped away. Dang it, it was not this time. Our time will come, hopefully. Anyway, dominance now for ETH is at 11.6% relative to Bitcoin's 54.2%. We got closer to 20% ETH dominance, really. We were up around 11.9% last week, so dipped back down, not terribly so. And not much really to talk about here when we're looking at that first page. It's pretty much the case that you're seeing alts bleed more than Bitcoin being the more stable option here to be holding, so not too much of a surprise there. It's been the best performer for the most part. One of the safer options to be in has always been Bitcoin, and that has been true throughout this cycle. So a lot of what's going on here likely having to do with just funky trading, of course, going on there. We saw that last week there were a bunch of different shorts that were liquidated as the market propelled itself higher. And now we should have expected, with how quickly that kind of happened, that the reverse would be true, that we would see massive liquidations in the long angle, and that's exactly what we saw. As you can see here, in 24 hours, we have a massive amount of liquidations, both on the long side and the short side, so kind of dangerous to be trading with leverage in either direction. The longs are down over $400 million, $480.46 million, according to data here on CoinGlass, while the shorts are only down $55.97 million. But still, even with the market dropping, you're still seeing liquidation, so it can be very dangerous to trade with leverage. And looking at this total liquidations chart, going back this time period, it looks like back till July. It looks like this cycle has definitely been more painful, even though it's been a bull cycle, right? It's been more painful looking at this at a glance to be on the long side, which is kind of wild to think about, but kind of a signal now that a lot of these high frequency trading bots and things are out here trying to liquidate each side and make money. So trade, again, just carefully, be super careful. If that's something you're going to do, I wouldn't really recommend that. And the biggest loser here on the day is Ethereum, down $105.17 million in liquidated longs versus $87.92 million for Bitcoin. So maybe us Ethereum folks getting a little bit of ahead of ourselves and getting really excited, making those long positions and getting destroyed in the process, and wiping out our capability to partake with as much, perhaps, pricing power in the future here by losing that cash, right? You want to hold on to your crypto just as much as you make it. That's a quick way to lose money. Fortunately, it was painful to a lot of folks out here. Crypto fear and greed index on alternative.me is showing us now at a greed, we're at a 70. Yesterday, we were at extreme greed, 78. And I'm looking at this right now because there is another more, I guess not more popular, but popular crypto fear and greed index that is produced by CoinMarketCap. And that one does not have data that goes as far back as this one that I've followed throughout the year. So that's why I'm looking at this one in particular. Although I saw the one from CoinMarketCap was down to the neutral territory. So it dipped from the greed territory down into neutral in the 50s, mid 50s range, if that's something that you're looking at. But yeah, definitely people have been shaken somewhat. Looking at this chart here, it goes back to February 1st, 2018 of the crypto fear and greed index over time. It is interesting to me that it looks like it's going up and to the right, kind of like Bitcoin. Maybe like over time we get more and more greedy as humans, or maybe bots as well. Yeah, definitely bots as well. We get greedier about crypto. Seems to be a thing. Maybe as more awareness comes out, as perhaps there's less volatility, at least with certain coins, as there's more trust and opportunity, it's just easier to get these things. People feel safer holding them, and therefore they want more of them, perhaps. Yeah, I wonder what this chart will look like in about 10 years, right? Anyway, just wanted to share that with you guys. So what dropped us today was more of a larger scale economic thing. So the Bureau of Labor Statistics JOLTS job openings for November unexpectedly rose 8.1 million from 7.8 million last month, easily topping analyst estimates as CoinDesk here of a decline to 7.7 million. So rather than losing these job openings, we ended up getting more than expected. And that means that the economy is perhaps running hotter than were the expectations, which would mean that that rate cuts would not be happening with perhaps the same frequency certain market participants might be expecting. We also got the ISM Services Purchasing Managers Index, a monthly gauge of the level of economic activity in the services sector. It came in at 54.1 for December, overshooting expectations of 53.3 and nicely ahead of November's 52.1. So hot again. And the prices paid sub-index came in red hot at 64.4 compared to expected 57.5 and 58.2 in the previous month. So yeah, all of these things together made the U.S. Treasury 10-year yield jump higher by another 5 basis points to 4.68%. And it took all sorts of things down, like crypto, like the stock market. And now we are seeing that using the CME FedWatch's tool, predictions for future cuts are even less than was previously expected over this year of 2025. So, for example, for the Fed's January meeting coming up, there's only now about a 37% chance of a dropping of rates, which was down from 50% just a week ago. And for the whole year, Bollinger Group's Kyle Chapman noted that investors are now only pricing in roughly 125 basis point cut. And you can see that for yourselves on the CMEgroup.com here with the FedWatch tool. So 95.2% chance that for this January meeting on January 29th, we pretty much keep at the same rates, which are elevated versus zero, right, than were expected. And in March, you also see it's 60.9% chance that we'll stay exactly the same. Only a 37.3% chance here that we will have a cut in rates that could, again, propel crypto and risk assets higher. And maybe around May is when it's looking like we have more of a possibility, 42.1% chance of a rate cut. So yeah, things not looking good in that regard. And that is what the market was trying to price in today and why you saw this kind of dip most likely that occurred. Besides, of course, all the liquidations and everything else that were more specific to crypto that I was looking at before. I thought this was of note here. So you actually look at that U.S. Bureau of Labor Statistics job openings report that CoinDesk was talking about. You can see the different job openings here, 273,000 business services and professional services, up in insurance and finance as well. Private educational services up, but a decrease in information technology. I think that's like a sign of things that are already happening with perhaps artificial intelligence being integrated when it comes to, for example, coding, developing different things. IT technology kind of getting impacted, it looks like, first here. That's my suspicion with what's going on with AI. We'll look a little bit at the end at this CES conference from the NVIDIA aspect as well. But this year is going to be crazy when it comes to AI, and these jobs numbers are probably going to continue to go down. And I think that's unrelated necessarily to inflation, and it's more of a technological thing. So I think some of these economists need to take their head out of that hole, like the ostrich head, right? Anyway, I found this post here for some hopium here when it comes to Ethereum. Wanted to share it with you guys. This was posted by WSB DGen number 9999 on the Ethereum Reddit. He asked Claude, the large language model, to provide some hopium here. And Claude said this. It's funny because I didn't actually read that it was Claude when I first found this. I just kind of read the whole thing and thought this was interesting. So I pass it forward. Afterwards, I was like, oh, it was an AI. Actually, pretty good job there from Claude. While Trump's re-election and Bitcoin-friendly stance created initial BTC momentum, this actually sets up ETH for an even bigger move. Why? Because Bitcoin was always going to be first. It's simpler for regulators to understand and approve. But now that the crypto door has been kicked wide open by Bitcoin, Ethereum is next in line with far more upside potential. The new SEC leadership understands what the previous administration didn't, although that isn't really the case yet. There's no real new SEC leadership that is in place yet, but it could be coming up, right? But anyway, that smart contracts platforms are the future of finance. They're not just approving spot ETFs, they're creating a regulatory framework for DeFi. Wall Street isn't going to be satisfied with Bitcoin's digital gold narrative. They want the entire digital economy that Ethereum enables, just like we heard about, I believe, 2 or 3 videos ago when I shared the video of BlackRock's Larry Fink talking about tokenizing all assets, right? That's really in line with what this is saying. Look at JP Morgan and Goldman Sachs quietly building on Ethereum's base layer and layer 2s, news that we have covered over the years. They're not building on Solana or any other chain. The institutional playbook is becoming clear. First, get Bitcoin exposure for their conservative clients. Next, roll out Ethereum products for those seeking growth exposure to the entire digital asset ecosystem. Ethereum plugs into so many different blockchains, so many different products, that it is a way of really like plugging into almost the whole ecosystem. So I get that. BlackRock didn't spend years building on Ethereum's chain for nothing. They see where the puck is going. What the market hasn't priced in yet: dank sharding and proto-dank sharding, reducing fees dramatically, the full impact of EIP 4844 on layer 2 costs, the massive supply shock from staking plus burning. Super sound money, right? That entire meme. Institutional products being built on top of ETH, major corporations tokenizing real-world assets on Ethereum, the network effects of having 5+ years of serious enterprise development. Solana's speed comes at the cost of centralization. That's why serious institutional money is building on Ethereum. They need regulatory certainty and true decentralization. The narrative that ETH is losing to Solana ignores that Ethereum's layer 2 ecosystem already processes more transactions than Solana with better security guarantees. The real story isn't ETH versus Sol or even ETH versus BTC. It's that Ethereum is positioning itself as a settlement layer for global finance. Bitcoin becomes the world's digital gold reserve asset, while Ethereum becomes a platform that powers everything else. The market cap of global financial services is over $22 trillion. Ethereum is building the infrastructure to capture a significant portion of that. Absolutely. With pro-crypto regulators now in place, major banks can now finally move forward with their Ethereum-based projects that they've been developing in secret. Yeah, definitely we've seen pilot programs and tests trying to move tokenized bonds, for example, moving them interbank. These kinds of projects have been announced. And publicly, we've seen the news. I'm sure there are private projects as well. They're not interested in chains that sacrifice decentralization for speed. They need something that can stand up to regulatory scrutiny while handling institutional-grade volumes. That's Ethereum and what it hopes to be, for example, with these new upgrades coming up that will make it a much better user experience, more data availability, faster throughput, lower fees, so much. Remember, Amazon wasn't the first website, Google wasn't the first search engine, and Facebook wasn't the first social network. Being first doesn't matter as much as being the platform that achieves critical mass of developers, users, and institutional adoption. Ethereum has all three, and now finally has the regulatory green light to realize its potential. So wow, really interesting take here from Claude AI. Did appreciate that post, and now by sharing it here on YouTube, AI potentially could be learning from this video and regurgitating this information in the future in its own way. So I've done my part to help the Ethereum ecosystem. Hopefully you guys are doing yours. Welcome guys, nice to see y'all tuning in. We got 14 concurrent viewers. That's among some of our highest of recent when we're now doing videos pretty much every day. The only day I'm trying not to do videos, just so you guys know, is on Sunday. A lot of the market information has been digested. It's the weekend. There's not a lot of news out there, and I need a day to catch up to have more of a life balance. But I am trying to get these videos out more on a daily level like before, so I'm excited to do that. Just a heads up there about the channel. Anyway, I wanted to know for myself. Let's see what did OpenAI's ChatGPT think about Solana and how decentralized it is versus Ethereum, because we always hear that, yeah, Solana is more centralized versus Ethereum, and I wanted to see what they had to say here for themselves. Maybe I haven't caught up with some of Solana's newest updates or news over the years, so yeah, let's see here. So Solana definitely seems to be more centralized in the sense that, according to this, running a validator requires significantly higher hardware requirements and operational costs. This is a barrier that leads to a smaller number of validators that are able to actually operate a mining or a node, rather a proof of stake node. And this increases the concentration of power among a few participants. And while you still need 32 ETH, $50,000 plus as of early 2025, and that can be costly to get some ETH, it's still more accessible than Solana's high hardware requirements. Additionally, staking pools like Lido, Rocket Pool, and centralized exchanges allow small holders to participate in Ethereum staking, enhancing participation. There are more and more products out these days that allow people to stake a lower amount of ETH and still get a return, right? Solana validators need specialized hardware with high RAM, CPUs, and solid-state drives and a high-speed internet connection to handle its fast transaction throughput. This makes it challenging for average participants to run nodes, favoring larger, well-funded entities. So on one hand, really great for users to get this speed on Solana, right? Like on that base layer 1 network. But at the same time, if there is some sort of problem, we've seen Solana have countless outages. Honestly, we've lost count over the years due to validator sync issues, due to these just how complex it is to manage all this hardware and all the different nodes. And it's in the sense of a governance and development that is more centralized from the top down for them to initiate things rather than being as decentralized, which for Ethereum, which has platforms like Ethereum Improvement Proposals, EIPs, that are quite public. No central authority dictates network decisions. It's a community-driven platform with developers, validators, and token holders all kind of getting their say. Solana has a smaller, more centralized core development team. Decisions can be more top-down. This is partly due to its newer status as a blockchain compared to Ethereum. Yeah, I guess you could say that. But it's also just like part of its principle. It never aimed to be as decentralized as Ethereum. And you can see that made very clear here when we look at the token distribution. So how tokens were initially allocated and how they've been gotten by the community, especially early on. So Solana's initial token allocation favored insiders, venture capitalists, and private investors, something I really dislike as far as projects that came out after I got into crypto and really got into Ethereum, seeing certain people able to get in at lower prices. And when it comes to Solana down here, we're talking about early investors for tokens for Solana were able to get at significantly lower prices, these things, 4 cents, while the public sale initially priced those tokens at 22 cents. So people were able to dump on even those public sale buyers, right? Approximately 48% of the initial token supply in Solana went to insiders, early investors, team, and foundations, whereas you're looking at about 80% of the ETH was sold during the public crowd sale that took place. 80% versus 1.6, I can't believe the number, 1.64% of the total supply that was available during the public sale for Solana. So you can actually see like the token allocation breakdown here from ChatGPT. 16.23% of the supply of Solana tokens went to seed round investors, 12.79% to the founding team, 10.46% of the supply to the reserve. Then you have validator sales, strategic sales, community reserve, and ecosystem. And finally, the public sale way here at the bottom, 1.64% of the supply. And for me, a lot of this crypto thing has been about equitableness, right? Making it so that the average person has this chance. So we can all mine that thing, get the ability to earn that sort of thing. And this made it very difficult for even like early adopters of Solana to have made a profit versus these other forces that hold a huge amount of say in that. So it's kind of cements to me just how much more I personally align with Ethereum and just its very nature and its inception and everything else, and initial token distribution, what it aims to do when it comes to decentralization, where it currently is at. So I can totally see why you would see these different entities around the world trying to build on Ethereum. Besides obviously having way more of a blockchain history, its decentralized nature does make it more resistant to attack from regulatory forces and many other things. So I just want to share that with you guys and get your thoughts on that. Maybe I'm completely wrong. Maybe ChatGPT is completely wrong here. Please fill me in on that information, and I would love to correct that in a future one if you guys take or have any challenge with any of what's said here. But to me, it seems pretty clear cut. What's up, guys? Thank you for joining me. Hey, Marshall, nice to see you too. Nice to see you. B Internet User 0321. Woo, yeah, you made it out live. And simplemente hermosas, divinas y maravillosas. Thank you. I'm glad you're appreciating that information. Anyway, Coinbase scored a legal victory today against the SEC. Significant development, it says here. It's one of the main news that's being shared out here. This is about that case between the SEC and them ruling Coinbase as having been a platform, it says it here, and operating an unregistered exchange and broker-dealer, and that its staking program constitutes the sale of unregistered securities. So now they will be moving further up the court system. This is explained here. Judge Fela of the Second District Court, I believe it is, has granted the company a very rare interlocutory appeal, however you pronounce that, which means she's allowing Coinbase to leave to make a request to the Second Circuit, appealing the SEC's assertions that the company is violating federal securities laws by operating as an unregistered exchange and broker-dealer, as well as engaging in the illegal sale of unregistered securities through its staking program. Further, it's district court that they're moving away from. Further, Fela says the district court proceedings will be halted in the meantime. So they're going to be moving to the Second Circuit, where Coinbase will seek to overturn the SEC's claims. And this does affect, I think, everyone, because this case will set precedent for the future for what is security, how open it is, our availability to buy assets which we research and deem worthy of our money to invest into personally as people. That might become less and less available over time if these things are deemed illegal securities. The kinds of products that we can access on Coinbase could be changing. So definitely rooting for them here against the SEC, and that is now moving forward. So I wanted to share that with you guys. Yolk, so this interesting, saw this out there while I was gathering my information for Ethereum. Yolk is a compiler which basically allows folks who don't know Solidity, so the Ethereum smart contract programming language, to use instead Haskell, a more popular language, which you might remember is what is used on Cardano. So anyway, this is something that could benefit the entire community. You have more developers around the world who likely know Haskell but do not know how to program on Solidity, and this will make it easier for them to code in Ethereum more products. Really cool. Where is it? Yeah, it's currently Yolk. You can check it out for yourself. So it's like a nod at Solk, the Solidity compiler. So this is now Yolk. It is the first milestone where this is a technical preview where people can produce partial ERC20 code, Ethereum smart contract code, deployable. Well, one of the standards for Ethereum code, deployable to Ethereum networks, demonstrating the key idea of linear type safety. They expect that they're going to have feature parity with actual Solidity by 2025's Q1. So in just the next coming months. So wanted to give you guys a heads up there. If you are for some reason into Haskell and haven't gotten around to Solidity and do want to test out smart contracts, maybe you should check out this technical preview here on yolk.dev. And yeah, wild. So we were talking about AI, what's going on, and how already it looks like information jobs are being lost relative to other kinds of jobs, looking at that jobs report earlier. And this is wild at CES, the big tech conference, seeing NVIDIA's announcements, driverless car technology, laptops that are like basically supercomputers that are going to be available for $3,000, the new generation of Blackwell 5000 series cards, and really their price to performance is looking really, really incredible. But I think just scrolling down here, this is one of the more notable things to me at the bottom that has the potential to impact humanity at large. By 2027 here, NVIDIA, Aurora, and Continental announced a partnership to deploy driverless trucks at scale by 2027. So they're already setting a kind of framework for themselves, a roadmap to put autonomous vehicles that don't need to have a human driver in them. So you couple that with looking at this robot technology that's also been announced, and you begin to see a clear picture of how humans are getting taken out of the picture here. And there's so many people around the world who drive trucks for a living, let alone professional drivers at large. So like a quick Google search here shows us that the trucking industry, the truck driving industry, is so large in the United States that it accounts for 5.8% of the workforce. Wow. Imagine when all those jobs are gone. Imagine when it's illegal for people to actually drive because of their safety profile relative to AI. And once you've gotten in a Waymo vehicle, again, like I did in Los Angeles, again, that just makes it clear to you as well, just how the world is changing so quickly. Like, are we at the singularity as we saw Sam of OpenAI announce on Twitter, or are we just after it? Are we before it or after it? It's getting harder and harder to see, and these lines are getting blurred. Crypto is definitely going to play a piece of this. And from what I can tell, it looks to me like the AI has become quite smart about AI and about crypto, and will probably seek to invest in that direction relative to buying physical gold. A little bit more difficult for AI, although the robotics might be able to achieve it. Anyway, I'll leave you with this nice video from London Real. I used to check this channel out all the time. Haven't watched it in a while, but there was this old interview with Andreas Antonopoulos, who along with Trace Mayer were probably the two people that I listened to the most to get really caught up to Bitcoin, where it was at when I started delving deep in 2015. And yeah, I'll just play this segment here from his interview, or London Real's interview with Andreas Antonopoulos, one of the greatest minds on the planet. And certainly we are blessed to have had him in Bitcoin, being such a great voice early on. And I wish more and more people could listen to his ideas. Yeah, that's what it feels like, just with crypto at large. I had to kind of contend with that myself. And that obsession for me with crypto was largely, I think, here with you guys, just delving into this stuff every day deeply, and then engaging with comments and finding content afterwards, and trying to go deep as well, vertically as well as laterally, right, to try to get you guys that information. And thank you guys for sharing that with me, because it has allowed me to, I think, do much better for myself with crypto than had I not started this channel. I think if I would have been involved in crypto without having started this channel, I would have made a lot of mistakes. So thank you guys so very much, sincerely, for being a part of this with me. And so I'll leave you with this quote of the day here as we wrap up, by Joseph Joubert. To teach is to learn twice. Take care, everyone. Much love, and stay cryptic. Peace.